Hello YouTube, and today's video is going to be a little bit of a different one. With all the changes happening in our market, I really wanted to bring on a good friend of mine who just so happens to be a mortgage broker to help shine a light on a few different topics that I feel are very important for my viewers to know and understand. Just like the real estate market, understanding the mortgage contract, its rates, and the general terms is very important and should not be left until the last minute. So please welcome Joel Richards to the call. Joel is a mortgage broker at the Richards Mortgage Group, licensed by Qantas Mortgage Solutions, who is able to help people coast to coast. He started his career in 2019 with a Bachelor's of Economics from the University of Calgary. Joel and his father are an absolute wealth of knowledge, and I'm very excited to have him featured on the channel. Joel, with so much happening in the past 6 months, how are things?
Good, man. Thanks for having me on the call. And yeah, things have been a bit of a whirlwind lately. Actually, the last couple of years have been a bit of a whirlwind, but things are good. Business is staying busy, and
Yeah.
but yeah, it's things are going great.
All right, so Joel, I do try to keep these videos under 10 minutes, which I know can be a little bit difficult given the complexity of mortgages. But before our call, you mentioned that people don't really fully understand just how complex mortgages are. Why do you think that is?
I mean, mortgages, like any other industry, are, there's a lot of different variables that affect how a mortgage works and the rate that you get and what you can qualify for. And so the average person, you can't expect them to understand these things. It's no different than going to a dentist or going to a doctor or, a mechanic, whatever other type of professional that you would go to and trust their advice. Mortgages are also very complex, and it's my job to understand these things and sort of translate them into layman terms so that the average person who's not focused on the mortgage market every single day can understand them.
Yeah, yeah, for sure, man. So I know that there are a lot of people out there that are pretty curious of how this 1% rate hike just affected them, but I would imagine they're not overly comfortable reaching out to a professional quite yet. You brought up a spreadsheet before the call, and do you think that you could just give a couple of examples of how this rate affected buyers in, let's say, the $400,000 price point and the $1 million price point?
Yeah, for sure. Yeah. So before the call, we were talking a little bit about the different nuances between fixed and variable rates. And like people think about mortgages and they just think about the rate and they think they're all one and the same, but there are differences to how they work. And so with fixed rates are priced off of the bond market, not priced off of what the Bank of Canada is doing specifically. It does filter through, but the 1% rate hike for the fixed rates has actually kind of been priced into the market for a while as investors within the bond market have traded bonds over the past several months, and their expectations of what's going to happen in the future of the economy impacts what's happening with fixed rates. So anyways, long story short, fixed rates have already priced in that 1% rate hike before it even happened. The 1% rate hike more directly affects variable rate mortgages, where they're priced off of bank prime, which in turn is priced off of what the Bank of Canada's rate is doing. So that 1% rate hike has more directly filtered through to a 1% rate hike in variable rates versus fixed rates. It's been more gradual, but they've already sort of come up. And so with fixed rates, buyers have already seen their qualifying power or their purchasing power decrease. Whereas with variable rates, where they've been quite a bit lower than fixed rates for the last little while, where they've been under 3%, it's still been that 5.25% stress test rate that's come into play. So you've actually been able to qualify for more with a variable rate than a fixed rate over the last several
Right.
months.
Yes.
But now with this latest Bank of Canada 1% rate increase, now the going rate for a variable rate is somewhere in the mid to high 3%. And so now it's starting to be that say 3.7, 3.8 plus 1% is now higher than that stress test rate of 5.25%. So now we're starting to see both variable and fixed rates being qualified at higher rates. And that's been one of the trickiest things in the market over the last little while, has been managing pre-approvals with buyers. Because if I tell you that, you're pre-approved for this amount based on current rates, but then rates go up, now all of a sudden you've taken a bit of a cut to how much you can qualify for. And so with things moving so fast, it's been a bit of a juggling act.
I could imagine. That's great information. I know that's a lot, and to be honest, I'm fairly impressed that you were able to just kind of verbalize all of that. So, just quickly, if you were to just give maybe some brief examples, and I know again it gets very complex, but for someone who was, let's say, pre-qualified for 450,000, and this rate hike at a variable rate, it went up 1%. How much buying power did they lose? And we'll do the same thing for $1 million. Just a
Yeah,
rough.
sounds good. Yeah, so I mean, very ballpark numbers, but in that sort of $400,000 to $500,000 price point, you've probably taken a $20,000 to $30,000 haircut to how much you can qualify for.
Wow.
And then if we're up into the $1 million or 900,000, million's kind of an interesting threshold because the rules for qualifying change over $1 million versus under $1 million.
Mm,
But anyway, so if we're saying $900,000 to $1 million, you've probably taken, so that's roughly double what the $450,000
mhm.
price point is. You've probably taken a haircut that's roughly the same, but double because the price point's higher. So
Right.
you've probably taken a $50,000 to $60,000 haircut.
Crazy.
So
Yeah.
that's not insignificant at all.
Yeah. Wow. That's pretty wild. And then, so I kind of want to shift gears here just a little bit. And I hear people say this a lot, and I actually say this to every potential buyer that I have conversations with. Do you think that you could give a quick example of, or maybe just explain why it's so darn important to get a pre-approval about 3 to 6 months and maybe even 12 months before you're actually ready to look at homes?
Yeah, definitely. So it all depends on the specifics of the financial situation of the person that's trying to buy. Some
Mm,
people are a lot easier to qualify for others, and other people need a lot more work. So if you're thinking, okay, a year from now, I'm hoping to buy a house, it's a good idea to start having a conversation with a mortgage broker. And you might discover that, there's some things that you need to work on in order to get yourself in a better situation to buy.
right.
Where if you approach a mortgage broker like a month before you wanted to start shopping, and then you discovered these things, you might not have time to actually make those adjustments
Hmm.
to get yourself in a position to buy. So that's why, as far out as you can, start talking to a mortgage broker, and we'll start guiding you in the right direction. Other people are fairly straightforward, and realistically, I can tell you, okay, yeah, you're pretty good to go, and this is kind of where your price ballpark is going to be.
Hmm.
Um, and if nothing's changing in your financial picture, that's going to more or less stay the same. Whether you're 1 month out or 12 months out,
Hmm.
it's when you start making changes to your financial picture that your pre-approval might change, because the pre-approval is basically just a snapshot in time of of what your financial picture looks like and how much
Right.
it can qualify for.
Right.
So yeah, 12 months out, I can help start guiding you in the right direction.
Hmm.
4 months out, we can start looking at rate holds. So especially in a market like we're in right now, where rates have
Good
been
point.
going up, it could be
Yeah.
fairly valuable.
Right.
People that were locking in rates in say May definitely benefited from the fact that they could still take advantage of where rates were at in May,
Right.
given where they're at now because they're quite a bit higher. So rate holds are sort of come into play generally about 120 days out. Some lenders will go a little bit longer, some lenders a
Mm,
little bit less. Not all lenders even offer rate holds,
mhm.
but we can at least put a rate hold in place. And then as you get closer to making a purchase, we can explore what the best options are available at that time. You're not committed to one specific lender. But a pre-approval and a rate hold is a little bit different. A pre-approval creates quite a bit of confusion in the market because there's no standardized definition of what a pre-approval actually is. So
Mhm.
depending on which broker or which lender you go to, you're going to get different levels of robustness of the pre-approval that you're actually getting done.
Right. Yeah.
So, some people might just ask you a couple basic questions, plug some numbers into a calculator and say, okay, this is the price point you can shop at, but it's sort of couched in a whole bunch of different assumptions. Versus what I like to do when I'm pre-approving somebody is I'm basically going to request all of the different documents that I'm going to need for an actual full approval at the time of a live offer. I'm going to request those up front, and I'm going to go through everything with a fine tooth comb
Mhm.
and try and find
Smart.
anything that might derail an approval when it actually comes time to make an offer. And so I'm going to pull your credit. I'm going to request all of your income documents, so your letters of employment, your pay
Right.
stubs, everything else. And I'm going to say, if something comes up that might create some challenges or whatever. For example, a lot of people, you've got a job and you're making X amount per hour, but you don't realize that if you don't have guaranteed hours, then we're going to have to look at say 2 years of tax returns. But if you haven't been in that job for that long, then it might be a challenge.
Mhm.
So there's tons of different reasons why
Right.
you might not actually qualify for how much you think just by punching in some basic numbers into a
Mhm.
calculator. And
Mhm.
so that's why it's really important to go through an in-depth pre-approval and really dig into the details, because the pre-approval is really only as good as the person doing it,
Right.
and how deep they want to dig.
Right. I like that. I mean, there's no more frustrating situation than finding something that you like, placing an offer on it, and then realizing that you didn't have the full pre-approval, and now you're dealing with some complications, and you've put a deposit down on the home, and now you're just very stressed out in that situation. And it is super important that people at least go through a fine tooth comb and figure out where they're at financially. So
Yeah.
thank you for that answer. I really do appreciate that. But Joel, I think that we're coming up to some time here. For those that are interested, drop a comment below. I think we're going to do a little bit more of a series and talk about some different things. So please feel free to ask some questions down in the comments, and maybe over time we can do some videos on that. But Joel, super good information. That was a lot. I cannot thank you enough. I really do appreciate your time here and having this conversation with me. If people want to chat with you personally and talk about some mortgage needs, how can they get a hold of you? What's the best way?
Yeah, awesome. Thanks so much for having me. It's been great chatting with you. And yeah, if people want to get a hold of me, probably the best way is by email. So that's joel@richardsmortgagegroup.ca. Bit
Mhm.
of a long one, but yeah, joel@richardsmortgagegroup.ca. Also, if you want my direct phone number is 403-896-5863. Give me a call or text anytime, and I'm always happy to pick up and start a conversation.
Perfect.
And that's the first step, is just starting the conversation and seeing where things
Exactly.
go.
Yeah. You got to make sure that you guys are going to vibe well. The confidence is there and you're confident with each other's personalities. So once again, thank you very much. If you've made it through the full video, thank you very much. And make sure to drop some comments down below and maybe we'll do this again sometime soon. So until next time, peace.
Awesome. Thanks so much.